Okay, let's start off with rights issue from accounts, guys. Small concepts. If you look at the study mat, we have only one illustration, but to understand the illustration, I need to give you about 20 minutes explanation. That's it. I will do that with the help of a small story. See if you're understanding. By the time story gets over, rights issue also will come to an end. Let's say we have Dilli Babu. Okay, Dilli is having shares in Yes Bank. Dilli is having shares in Yes Bank. How many shares is having in Yes Bank? He purchased 10 shares. Sorry, 100 shares. He purchased 100 shares when the share was 25 rupees. So if you look at Dilli Babu's portfolio, he has how many shares, guys? 100 into 25. He invested 2,500 rupees in Yes Bank. In some time, Yes Bank is issuing a rights issue. Let us understand what is a rights issue, guys. What is a rights issue? Now, what do you mean by rights issue? Sometimes, let's say, when a company wants to make a fresh issue, they issue shares to the existing shareholders. Let me explain rights before I go there. Why will I make issue to existing shareholders? Let's say you have one company is there. Company wants to give some gift. Okay, they will give gift to some strangers outside, or they will give the gift first to the existing employees. Existing employees. Same way, let's say you want some money. Will you straight away go ask some bank for loan, or first you will ask your known friends and family? Known friends and family. So if anytime you need some money, you will ask your known friends and family. If there you are not getting support only, you will go ask outside to some company randomly. Like that, if a company wants to issue shares and get more money, will they ask, you are all the shareholders, guys. I am the company. Company wants money. Will I ask existing shareholders, or I will ask somebody outside? Existing. So, company, you are already shareholders. Raising money from existing shareholders is called rights issue. Okay, what is rights issue? Raising money from existing shareholders. So, let's say you are the shareholder in Sun TV. I am Sun TV. And let's say one share of Sun TV is priced at 500 rupees. Now, I want more money. So, I am issuing more shares. If I ask you, rupees 530 per share, will you give 530 per share? No. In a market itself, it's 500. Why will you pay 530? But I want you to invest. So, how much I will ask you? Less than 500. If I ask you to give me 470 rupees per share, you will be more than happy. Market price 500. If you pay 470, you will get more shares. So, basically, what is rights issue? What is rights issue, guys? Money from existing shareholders. Okay. Keeping this in mind, Yes Bank wanted to raise money from existing shareholders. So they made an offer to Dilli and to all the other shareholders. They told, for every 10 shares you have, you can buy one share. For every 10 shares that you have, you can buy how many shares, guys? One share. And one share you can buy at how much? 24 rupees, they told. You can buy one share at how much, guys? 24. Sorry, we'll change it. 24 is too small, too close. You can pay 14 rupees per share. How much, guys? 14. So, Dilli Babu has how many shares, sir? 100. Correct? So, he can buy how many shares? 10 shares at how much? 14. So, he will pay how much? 140 rupees per share. If he wants, he can buy. Not mandatory. Let's say first case, Dilli Babu purchased it. So already he has 100 into 25. Now he is buying 10 into 14, which is 140 per share, which is 140 per share. So totally how much money Dilli Babu paid? First he paid 2000. Then he paid 140. How many shares he has totally? 100 plus 10. So the total comes to 2640 is the amount he has invested overall for how many shares? 110 shares. So effectively his share was 25 rupees. He got the offer for 14. So now all his 110 shares on average, one share will become how much? 24 per share. Correct? This decrease is happening because some shares are at 25, some shares are at 14. So it will come in, it will drop. It dropped from 25 to 24 only because for every 100 shares, one share. So the drop came to 24. Have you understood till here? That means cumulatively Dilli Babu has now how many shares, guys? 110 shares into 24 shares. What happens generally in the market? The price per share, whole market share price was 25. Now company is giving only to existing shareholders at 40 now. Because company itself is giving at a discount, share price will fall. Generally, it will not remain at 25. It will fall. In this example, from 25, it fell to 24. Are you following, guys? It is a normal behavior pattern. How did you find this 24? 2640 divided by 110, which is nothing but 25 plus 140 divided by 100 plus 10. Correct? So, can you give me the breakup of these numbers? What is 2500 in English? 100 into 25 plus 10 into 14 by 100 plus 10 is equal to 24. Correct? You found this, guys. Let me write this in English now. 100 is nothing but existing number of shares into market price before rights plus rights shares into rights price whole divided by existing number of shares plus new number of shares. Existing plus new number of shares. Following, guys? So this is the formula given in the book. We have derived it now. Have you understood? Formula for what? Formula to find this 24. Why should I find 24? I will explain in some time. I will explain in some time. Are you following, guys? So this is 24. This answer is 24. If I do this whole equation, this 24 is called, theoretically it's the price of share after rights issue. I don't know whether it's going to be actually 24, but using equation it's 24. So this is called theoretical X rights price. It's called theoretical X rights price. Don't mug up the equation. Following till here, guys. Let's go back to the story. This happens only if Dilli Babu is buying the shares. But is it mandatory to buy 10 shares at 14? Not mandatory to buy 10 shares at 14. So what Dilli Babu is doing, what he is doing, guys, he is deciding not to buy the shares. Why should I buy 10 shares at 14? I don't want to buy. Or when he got the offer, rights offer, he was sleeping, he was in Goa, he didn't reply, he didn't see the offer, he missed the mail. So he decided not to buy. So first option is he accepted to buy. Second option is rejected to buy. If he rejected to buy, how many shares he has left with him? 100 shares only. Correct? First he had how many shares? 100. He will have the same 100 shares. Correct? He will have the same 100 shares. Now with this 100 shares, Now what is the value of these 100 shares? 25 was before rights issue. If he is not buying the shares at 14 rupees, somebody else will buy up. So anyway, the share price from 25 will drop to 24. So he is seeing the market price from 25 becoming 24. So his revised portfolio is 2400. He lost how much, guys? 100 rupees he has lost. Is he going to be happy? No. So Delhi Babu is going to Yes Bank and telling, hey, Yes Bank, give my 100 rupees. What Yes Bank will tell? Naadu kudukano. Nee vaangala rights issue. So isn't this indirectly company is forcing you to take rights shares? But I don't want to take rights shares. So Delhi Babu is now angry. He is little irritated. Enna sir, what is this? If I purchase means okay, my revised portfolio becomes 2640. Price can generally will not go up after rights issue. Okay, it will not go up because I'm giving you something at discount. Okay, so now price is 2400. So Delhi Babu is angry, thinking what to do. In this time, Delhi Babu, let's say he met his friend Naveen. Naveen is not a shareholder of Yes Bank. Delhi Babu was walking on the road, he met his friend. Naveen is not a shareholder of Yes Bank. But Naveen wants to buy shares of Yes Bank. But if Naveen has to buy in the market, he has to pay 25. He wants these right shares. What is the right shares? 10 shares into 14. Who has the right to buy this? Only existing shareholders. Who is my existing shareholders? Delhi. Delhi has the existing right, but he doesn't want to use this right. So what Delhi will tell? Sira, I have the option to buy shares at 14 rupees per share. That offer letter is with me. That offer I will give you. You buy that. You buy those shares. So instead of Delhi, who is buying? Naveen is buying those shares. How many shares? 10 shares at 14. So Naveen has paid 10 into 14. But what gain is Delhi getting? Nothing. So Delhi is saying, because I am giving you the right to buy 10 shares as 14, I want some money. How much money he will ask? How much, if you are Delhi Babu, how much you will ask? You will ask what? 100. Why you will ask 100? Because that was my loss. 100 rupees vanda podu. So Naveen, what he will do? He will pay 10 into 14 to Yes Bank and he will pay 100 to Delhi Babu. So Yes Bank also is happy. Naveen also is happy. Correct? Naveen is happy because how many shares he bought? 10 shares. How much he paid? He paid 140 to Yes Bank and paid 100 to Delhi. Totally he paid how much? 240. For how many shares? 10 shares. Per share value is, how much is per share value? 24. That means Naveen indirectly paid the same 24 X rights price, theoretical X rights price. But he paid 14 rupees to whom, guys? Yes Bank and 100 rupees to Delhi. Now look at all the three parties. Yes Bank is happy. Yes Bank rather share vaangano. Either Delhi or Naveen. Yes Bank is happy. Naveen also is happy. He got shares of Yes Bank. Otherwise, only existing shareholders can buy. He is not existing shareholder, but he was able to buy. Naveen is happy. Naveen also is happy. Delhi was also happy because he had a loss of 100 rupees. He got 100. Correct? So this concept is called renunciation of rights. Renunciation of rights. What do you mean by renunciation? எனக்கு ஒரு rights offer வந்தா either I will accept the offer, reject the offer, or renounce it in favor of somebody else. Let somebody else buy those shares. Are you following, guys? Now, if you are Delhi Babu, if you get the offer, which is not a good option? Option B, which one? Rejecting is not good because if you reject, you will have a loss. So either you have to accept or renounce in favor of somebody else. Correct? Following, guys. So in the question in exam, he wants you to find this 24. That's question. How to find the 24? We have this equation. existing number of shares into market price before rights. This is also known as cum rights price. Also known as what, guys? In our example, it was 25. It's also known as cum rights price. Why it's called cum rights price? Because this 25 share price per share is cumulative of rights. What do you mean by cumulative of rights? The price, if I buy a share at 25, I will get the offer to buy share at 14, correct? If I buy a share at 25, because Dilli Babu bought share at 25 only, he later got the share option to buy at 14. So the 25 is cumulative of rights offer which I will get in the future. So it's called cum rights price. But if you buy share at 24, will you get option to buy rights shares at 14? At 14 you will get no. This is the price after rights issue. So it's called X rights price, excluding rights issue. Theoretical X rights price. So our agenda is to find this 24 applying this equation. This is the whole concept. Now sum is just 30 seconds. I know I would have spent 15 minutes. Sir, idella okay sir, this is the logic. I always teach with logic. It's easy to understand. In exam, how to do, sir? I want to know the steps. Look at the illustration 5. A company offers rupees 100 each share at a premium at 25% of 100 rupees share at 25% premium to existing shareholders for 1 for every 4 shares. The cum rights price is 150. 150 in our example is 25. Okay. I am giving shares at 100 plus 25% premium. So what is the rights issue? 125 is like 14. Correct? 125 is like 14. He is asking you to calculate two things. Calculate value of a right and what should be the X right market price. Sir, number of shares kudukla sir. Let me assume for simplicity purpose, number of shares are 1 lakh. Okay. So 1 lakh shares on a market price in this question is how much, guys? 150. 1 lakh at 150. Now how many shares I am getting rights? 1 for every 4. So it will be 1 lakh into 1 by 4. How many shares? 25,000 shares I will get. I will get 25,000 shares. And how much I have to pay? A company offers 100 rupees shares at 25% premium. So I have to pay 25,000 into 125. Let me apply that equation I told you. Existing number of shares 1 lakh into 150 plus new number of shares 25,000 into 125 whole divided by existing number of shares plus new number of shares. What's the answer? Compute and give me the answer, guys. How much? 140? 145 came up. Are you following, guys? So look at the answer over here, 145. Are you getting it, guys? But sir, they have done a different method. No sir. What is that method? I want to know that. I assume the shares to be 1 lakh. In a question, a number of shares kudukla. You assume any number of your choice. Same thing. Let me assume number of shares are 50, guys. 10 no assume. 10 assume. How you guys saying 10, sir? So 10 into 150 plus I am giving 1 share for every 4 shares. So 10 into 1 by 4 is how much? 2.5. So 2.5 into 125 whole divided by 12.5. What answer you are getting? If you are assuming 10, are you getting the same answer? Number of shares you assume panna solra. Assume the number of shares. 145 is coming up. So you can assume any number of shares. It's ratio. 145 is coming. In the book, what they have assumed, they have assumed that company has, they told ratios 1:4, ratios 1:4, so they are assuming company has four shares. So 4 into 150 plus 1 into 125 divided by 5, how much? Same 125, correct? That's what they have done in the book. Look at this, 150 into 4 plus 125 into 1 share divided by 5 shares. Are you getting it? Any number you can assume, even 30,000, 40,000, it's a ratio, it will work. Are you following, guys? Now let's come back to this. What was the price of rights before bonus issue, before rights issue? Price per share 150. Now the price is, what is the fall? 5 rupees the share fell because of rights issue, correct? That is called value of right. Value of right is what was the price before and what was the price after. So 1 share fell by how much? 5 rupees. In my question, I am assuming I have how many shares? 4 shares. In the book, they are assuming 4 shares. So if 1 share fell by 5 rupees, if they are assuming 4 shares, 4 into 5, they have to pay how much? 20 rupees. This 20 only is what Naveen will pay to Dilli Babu. In our example, it was 100, correct? 10 rupees per share. My loss was 10 rupees per share. Are you following? How, sir? In our example, 1 share was 25. Later it became 24. So my loss is 1 rupee per share. How many shares? He had, Dilli Babu had how many shares, sir? 100 shares. Dilli Babu had 100 shares. So if I come back to this example, I told you Naveen had, Dilli Babu had a loss of 100. What is this loss of 100 which Naveen paid? Nothing but the price per share of Dilli Babu was 25 before, it became 24. So Dilli Babu is losing 1 rupee per share. He is totally having 100 shares. So he needs 100 rupees recovery which Naveen paid. Correct? That's why he paid 100 in our example. Are you getting the logic? Same way in this question, 150 was per share, it became 145. Loss per share is 5. In the book they assumed 4 shares, so 20 rupees. If you have 1 lakh in our thing, 1 lakh into 5, 5 lakh should be paid. Are you following, guys? Understanding the logic of this equation? Same thing, only one sum is there. Let's see if we have any practical questions. It's there. Practical question 4. Can you all quickly try this? I will also solve it just for practice. In exam, you have to do 2 things, guys. Very simple. In exam, what you have to do, I'll give you context. First, you find that 24 in our example, applying the equation. Next, you do 25 minus 24 value into number of shares. That's it. That's all for exam. Quickly do question number 4. It will take only 30 seconds to do it. In 30 seconds, I will start solving and then we will close rights issue. Practice this. It could be a 4-mark question, 3-mark question in main exam. Number of shares is not given. So if number of shares is not given, you have to assume. If you have to assume, better to assume what they go in the book. 1 share for every 2 shares held. So you assume you have 2 shares. That's it. In that question, 1 for every 4. So we assumed 4 shares. Here 1 for every 2, assume 2. Done, guys. How do we solve this? 1 for every 2 shares. What was the price per share? 240. Issued at 120. Let's do that equation. So existing number of shares, I have 2 shares into 240. Existing number of shares into existing price. Plus now I am getting 1 share into 120 whole divided by 3. How much you are getting? You are getting how much? 200. So value of right will be 240 minus 200, which is 40 per share. You have how many shares? So 40 into 2, it will be 80. Are you following, guys? But in exam you should not write only this and the English எழுதணும். Existing number of shares into cum rights price, all of that. So 280 is the answer. Let's quickly check. That's it. 200 rupees and 40 is the value. It became 80. Are you following, guys? But you have to write this equation. This formula I told no. Existing number of shares into cum rights price. Which one? This equation you have to write, which I derived. Are you following, guys? That is the answer. All of you understanding? Better to write. Explain this. 4 marks இது கொடுப்பான். 4 marks will I get if I write like this? If I write like this, 4 marks வருமா? Answer is correct. Same 200, 40, 80. You have to explain. X rights price is 200. Value of a right is 240 minus 200. Correct? What is 240? Cum rights value. What is 200? X rights value. So per share for me value is 40. How many shares I have? 2 shares. So 2 into 40, 80 rupees nee pay pannana, then you can renounce. I told you can renounce the right in favor of the other person. Presentation for 4 marks. Are you following, guys? Easy. Everybody understanding? How many of you studying rights issue for the first time? Understood? Clear? Honestly, with logic? Clear, guys? Online, if you understood, type a yes. If you have any doubts, put the doubts. Otherwise, we will close. Question 5. Practice question 5 should be the same. A company having share capital of 25,000 of share 10 decides to issue rights of 1 for every 4. That means it's going to be 25,000 into 1 by 4, which is how many shares? 6,250 held at par value. Assuming that all the shareholders accepted the rights issue, so everybody accepted, nobody renounced, all the money was received, passed a journal entry. That means 6,250 shares into each share is. Adhe face value he is giving for face value, no premium, no reduction, everything at 10. So 6250 into 10 is how much, guys? 62,500. I will just pass one entry for issue of shares. That's what they have done. Bank account debit to share capital 62,500. That's it. Understanding, guys? Okay. So with this, we are done with rights issue, guys. Thank you.